Welcome to RenMac Off Script. We only discuss markets, economics, policy, history, and life. It is the 18th of October, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pathak.
As a reminder, all the charts that we reference are posted to our Twitter account. We're going to get right into it. You guys know all that. But go to YouTube. You might as well see us while you're out there. You can see my bad hair day. My God, looks like I just got out of bed. Not sure what's going on there. Neil, data this week. What's happening? Or what happened?
At your age, you should be happy there's even hair to worry about.
You know what? I have a full head of hair. I have no problem with that. It's yeah, that's not an issue.
I don't know. I think I don't know. I mean, if could be my camera, but I can kind of see your scalp. So
no.
Well, you know, the data. I think it's sort of the fog of hurricane effects. I think in some respects. You know, so we had a very strong retail sales number this week, but I also think that part of that had to do with sort of crowding in effects, right? So people kind of stocking up on food and maybe building materials ahead of Hurricane Helene. Maybe there was some front loading of consumption ahead of the port strike. People worrying about whether they're going to get food and goods and things like that. And then you had industrial production, which kind of went the other way. Right, like so, you know, factory shuttering, Boeing strike. So you had a drop in manufacturing production. So the data have kind of been all over the place, but net, I mean, the retail sales number dominates kind of estimates of GDP tracking. So you probably got, you know, I mean, you have GDP tracking now running well above 3% for the third quarter. Now, that being said, I do think that there's multiple reasons to expect growth to moderate as we head into the fourth quarter. Number one, the pace of consumer spending growth isn't going to be as strong going forward because income growth has been slowing. So at some point, I mean, how long is it going to be that consumer spending is going to be running ahead of labor incomes? The second, of course, is that Boeing is going to weigh on equipment investment. And remember that aircraft spending was a big driver for growth in recent quarters. I mean, I think it added almost half a percentage point to GDP in Q2. That's just not going to happen in the fourth quarter. So equipment's going to be weak. And residential investment, the third point, that's also going to be weak going into Q4. You have, you know, ultimately starts are running below completions. Housing starts are running below completions. And when that happens, you'll see continued declines in units under construction, which will then weigh on residential investment. We also know that mortgage rates are high. They backed up in recent weeks, particularly after that last employment number. The inflation data, you know, added a little bit more fuel to that fire. And you know, you're basically back to a 6.5% 30-year fixed rate mortgage. You know, the result of that is very obvious for people to see. You saw a big drop in purchase demand in the latest week. And that's going to weigh on housing transactions. So, you know, really the only game in town for residential investment is to the extent to which people kind of put their hands in the air and say, you know what, I'm not going to look for a house anymore. Maybe I'll do some work on my existing home. And so, you know, that's kind of where we're at. And, you know, look, I mean, there's this, we were in Boston this week talking to clients and, you know, the issue, obviously, it's sort of the same kind of, are we going into recession? Are we no landing? Are we, you know, I mean, these sort of scenarios. As I've said, I mean, I think soft landing is still the base case. The issue right now is just the distinction between how you think that's achieved. Okay, I mean, do you think that the Fed's going to have to do a little bit more front loading of rate cuts to achieve a soft landing, or do you think the data is going to basically be so strong that they won't have to do that? I tend to lean towards the former. So that's kind of why I think there's a little bit of opportunity in the front end, because I think the Fed may have to be a little bit more aggressive than the markets are pricing. And if I had to point out a risk, I would just say, you know, the data has been strong. I think the risk is, does that lead the Fed, which is highly reactive to every wiggle and squiggle in the data, does that make them breathe life into the notion that they may skip a meeting this year? And do they breathe life into the idea of a skip at a time the data begins to slow again? A lot of this just feels eerily familiar to what happened in the first quarter, where, you know, we had a couple of hot inflation prints. Everyone was saying, I mean, not everyone, but a lot of people are saying there are going to be no cuts, no cuts. This is, you're back to the no landing. And it just didn't hold up. And, you know, I think, are we doing that again? Just on a smaller scale. So I don't think things have changed as much as the markets have said they've changed, particularly fixed income markets. And I think soft landing is still a reasonable base case. I think there's reasons to think that inflation is still cooling, the labor markets are still cooling, and I think you'll see more evidence of that in the fourth quarter.
Are global economies helping or hurting?
Well, I mean, what's interesting about what's happening globally is, you know, the Bank of Canada is teeing up a jumbo rate cut. You know, the Bank of England was expected to do a cut and a skip. Now it's a cut. The ECB cut, adopting a dovish bias. And that to me is a reminder that there's a global element in the disinflationary process that we're seeing unfold around you know, major economies. Doesn't mean it's perfectly synchronized, but there is an important global element here. And I think it's kind of foolish to assume that the US won't be taking part on that. I mean, yes, we are a strong economy. We shouldn't be cutting as much as some of these other central banks, but that doesn't mean that we shouldn't be easing policy at all, particularly considering they remain in a restrictive setting.
Who's the Fed shadow chair?
It was a great question. I mean, that was a question that was going around at our lunch in Boston. It's fun to speculate about it. You know, I do find like the kind of lighting your hair on fire over like, this is an absolutely terrible idea. Like, oh, you know, and it's kind of, well, you have to put yourself in the shoes of someone that's working for Trump, which is obviously very difficult for a lot of people that opine on these issues to do. But if he's trying to come out and say, well, how do I undercut Jerome Powell without actually firing him? This would be a way of doing that, right? I mean, all you're really doing is pulling forward something that's going to happen, right? In a way, it's hyper forward guidance, is it not?
Maybe with a bit of a bias. Yes, guidance with a bias.
I do think it's kind of interesting. I mean, obviously the usual, you know, sort of this is the threat to the Fed's independence, but it's really just the White House getting out in front and doing their job sooner. I mean, is that a bad thing?
Wait, are you telling me you're for this this plan?
I'm not for it. I just think that you have to think outside the box. You have to put yourself in the shoes of the people that you may not agree with. Right? Like so look, do I think it's the best thing to do? No, but it's also something that's going to happen anyway. It's also something that's going to happen anyway, right? At some point, Jerome Powell's tenure is going to be over. It'll be over by 2026, right? So, you know, I don't know that it's going to be the first thing on the agenda, but if it means that, you know, some chair is announced earlier, you know, so be it.
So you see this as like a training program.
Well, I mean, I don't know that it's going to be someone that's sort of outside the system. I mean, it's an interesting, I mean, it's just, you know, there's a lot of moving parts. I'm not saying I endorse it. I just think that to me, it's a unique way of looking at something given the position that you're in, which is working for Donald Trump. I mean, that's, you know, that's ultimately what it's about. Now, there was an interesting New York Times article that came out earlier, I think in the week, basically speculating. It was sort of a kind of a puff piece for Mickey Bauman. And I've been on record as saying she's absolutely someone that might be considered for the role, you know, when Chair Powell is, you know, his tenure is up. And the reason is because number one, she's already been nominated and confirmed by Trump. And one thing that she has going for her is that she dissented on a 50 basis point rate cut ahead of the election. Now, that doesn't mean, I mean, right? Like, I think the 50 basis point move was the right thing to do, but I know former President Trump doesn't think it was. So it's really, I mean, you have to, I mean, to me, it's, I don't know. I mean, I don't want to try to get into his head, but my sense is that Waller supporting the 50 basis point move, even though he was a former Trump appointee, in Trump's mind, that's disqualifying.
Right.
That's totally disqualifying.
Yes.
At the end of the day, you have two people that you nominated that are in there, right? And we know from past experience that Trump does like to nominate people from within the Fed, because I would assume that there's going to be less resistance in the Senate if you bring someone from within the system. So the sort of clearing, you know, the bar for someone like a Warsh or a Hassett is probably higher than if you went just from someone within the halls of the Fed already. So that to me means the odds-on favorites are Bauman and Waller. And in Trump's mind, Waller supported a 50 basis point cut, and this other one didn't. She dissented. So
Understood.
it's I mean, I don't know why people would be so shocked by it. I mean, look, I don't make a judgment about whether Bauman is the right person for the job, whether it's just about like, if you're making, I mean, she's hawkish, that's for sure. It's very interesting to see her being used in debates in the vice presidential debate. One of her speeches was referenced, namely on the link between immigration and housing costs. I think that's kind of, I don't know if that's a coincidence.
Right.
But, you know, I mean, there's, you know, look, I mean, Bauman, I think the New York Times article talked about how she's sort of kinds of the VP for supervision role, the one that Barr is in right now. They weren't really talking about the chair, but I don't know why you'd rule that out, frankly. Yeah. I mean, so, you know, it's interesting to speculate on.
Every McDonald's manager has to start somewhere.
Personally, I don't personally love the idea of like nominating someone like a year out. But, you know, I mean, it's sort of, look, I mean, this is how the system works. I mean, you know, this is how the system works. I mean,
all right, well, let's get into whether or not this is going to happen even. So let's ask.
Yeah, I mean, I don't know, but I would just say that, look, I mean, we have, you know, the Fed is a strong independent institution. But there are some elements that don't want it to be as independent, right? And for whatever reason, you know, maybe they get into the White House. I mean,
like,
you know,
if anybody who's a president,
we don't make the rules.
If anybody who's a president's gonna want the Fed on their side, it's a former New York real estate developer. I mean, talk about.
He's definitely. I mean, that was. I mean, he's for. I mean, Trump is for low rates.
100%.
So long as he's in office.
Yes, correct. That's well, and that'll be the interesting thing, right? Is she hawkish? Is she a hawk? And then is she forced to, you know, wear dove wings? I mean, that'll be
right. Right. I mean, well, that's sort of that's the risk, and that's the thing that will lead to an increase in inflation expectations, because you have someone that's politically pliant to the White House.
Which is important, by the way. I mean, if you get
absolutely no, I mean, look, I don't endorse the idea. I'm just saying that, you know, it's sort of
yeah, you're laying it out. I get it.
Yeah, I mean, it is what it is, you know.
But if you look at inflation expectations and you start pushing those again above 2 on real rates, I should say, not expectations. So if real rates start pushing above 2 for forward real rates, that does start to impact equities, right? So you've got a bit of a give and take there. I understand the interest in obviously having a hot economy, having a lot of jobs, you know, people with jobs vote. That's very important. But once you start, if your litmus test, which has been in the past, your 401k account, your beautiful 401k account, if that starts being impacted by real rates above 2, then you do have that yin and yang is going to have to fight. So this is all conjecture. Neil, I'm sorry, Steve.
But it's fun to think about, especially because Trump goes around all day. I mean, he had a great line at his Bloomberg News interview this week, where he basically said, like, the chairman of the Fed is like the best job in Washington because you just flip a coin and then everyone assumes you're God. And I was thinking to myself, fact check, mostly true. And it was one of these things where, I mean, he always brings up like 2019 where like the classic Trumpian thing where he basically said, feel the market, Jerome Powell, feel the market. And he just went out and said, I was right. And it's kind of interesting because, I mean, Powell did go from saying we're a long way from neutral to cutting rates a few months later. So it's just again, it's interesting. And, for all his flaws, I think on a Republican adjusted basis, Trump has reasonably good monetary policy instincts. I mean, most of the people in his party are very much hard money people. And,
Yes. Yes.
and I think he's got a better sense, not than the people in the Fed, as he claims, but certainly he's better than the median Republican politician on monetary policy.
I will say he certainly has he does have that quote unquote feel. I mean, I would expect him to, as again a real estate developer. That is a pretty important component to your not necessarily day-to-day thinking, but certainly your long-term kind of expectations of how you're running the business. Steve, between today and this time last week, things going more in former President Trump's favor or more in Kamala's favor, and where are we in those polls now?
Polls continue to be close, but you see minor movement in the favor of Trump compared to major movement in the betting markets. I'm just looking at the Real Clear Politics average right now. Trump is ahead in the battleground states, which are more important. Them average by 0.8%. That's his largest lead there. And you look at the betting markets, it's over 17.5% now, according to the Real Clear Politics average of betting, even predicted. I believe now Trump's up by 8, which I think is his largest lead, at least relatively recently, with Harris at the top of the ticket. So, you talk about, the vibes. That's been one of the big things. Well, I mean, the vibes right now tend to be moving a little bit more in Trump's direction. I would caution, though, I think there's a lot of the assumption being made about the polling, and the main one being that they're going to be off by a similar amount as they were in 2020 and 2016. They may not, we don't know. But I think that's where any marginal movement, anything this close, is significant. I think any movement in general, as we get closer to election day, may be an early indicator of, a shifting environment. Probably too early to say that, but obviously Trump and I think some people in the betting markets are sort of, hoping that's the case. But we'll see. In terms of events this week, I thought the Fox News interview from Vice President Kamala Harris was interesting. Politicians follow the polls, and my guess is that they're seeing the same polls and worried about the same trends, which may be why they were trying to expand her target audience, maybe specifically targeting some of these Nikki Haley supporters. In terms of the performance, it's probably a political Rorschach test, in terms of Republicans saw what they want to see, Democrats maybe saw what they want to see. I think objectively, you had a lot of direct questions. You didn't necessarily get a lot of direct answers. So I don't know that the political needle was moved in a direction that Harris was probably trying to take it in terms of trying to expand that appeal. Again, probably more the Haley Republicans reluctant to support Trump. I don't know that she provided enough specifics to make them comfortable supporting her. But I don't think it was a disaster in terms of costing her support amongst her base, which is probably in a get out your base election, which I think we pretty much are in right now. It's going to come down to.
Yeah, is there any evidence that I totally agree. The risk is that the Trump team kind of believes that there's a built-in, call it 4-point bias, right? Mm-hmm. Is there any evidence, or have we heard? I mean, look, these pollsters adjust their models, right? Do we know if they have, actually taken that sort of hidden Trump support and been able to carve it up in a way that they, that they're able to remove some of that skew?
They say they have, but again, they said that in 2020 and the bias was worse than 2016. So take it with a grain of salt. I think when you're looking at the polls, go through the crosstabs, so to speak, and maybe see, where are they actually getting these Republican numbers? Are they getting enough respondents? Not just going to necessarily skew the Democrat number, but are they sort of trying to make assumptions on turnout and maybe padding a few in favor, sort of trying to account for a less representative sample. I don't know, but we're talking about objectively a race that in the competitive states is within the margin of error. So any polling error one way or the other is probably going to have a disproportionate outcome.
Yeah. I will say the Kamala impersonator on SNL has done a very good job. I can't remember
Maya
her name.
Rudolph.
Yes, she's been around a long time, but she certainly is sticking the part. Maybe
Jim,
not
Jim
quite as well.
Gaffigan as Tim Walz is also pretty good. A little too on the nose, if you ask me.
Yeah, no, you're right. And I was gonna say Dana Carvey is, I mean, he's been doing it, but he's a home run as Joe Biden. I mean, he's just so good at pulling those strings. No joke, no joke. Well, I
Trump
was
had
in
a
the
great joke at the Al Smith dinner yesterday where he's like, Jim Gaffigan, you're doing great as Tim Walz, but don't worry that you won't be having to do that for much longer.
I mean, he has had a couple of zingers in the last
I mean,
48 hours.
I encourage everyone. I mean, even Brian Stelter on CNN, I think, said he was pretty funny.
Yeah, I mean,
Like, he basically made like light of his assassination attempts. Like, people have been taking shots at me for a while, so I would have had no problem having people take more shots at me here at this dinner, so something like that. I mean, I don't know, but
well,
at
yeah.
any rate.
Yeah, I mean, look, I think he can play to that crowd and I'm sure that's one of the reasons why his rallies are so big. I mean, it's almost like a stand-up comedy show, right?
Let me ask you, Jeff, are you seeing signs of in the markets in terms of expectations for a Trump presidency now, like we're seeing in the betting
Yeah.
markets and the polls?
Yeah, if I have to kind of again listen to the market's message, Fannie Mae up. I mean, Fannie Mae's a penny stock, right? It's a buck, whatever, $1.12. I think it's trading. Well, let's look. It's certainly trading higher. If we look at crypto as an example, that's been doing well. So Fannie Mae up, roughly 30 cents over the last 2 weeks, right? Not a big deal, except for it was $1.10, right? So 30 cents is a big move. So seeing it in crypto, seeing it obviously in DJT, though there are some other things that are associated with that. So yes, at the margin, I think you're seeing it. You're also seeing strength, and I was in the Midwest this week and talking about this strength in China, and I think that'll be interesting because people presume that a Trump presidency is bad for China, and it might be, but what I would what I would say is, maybe if he's got them kind of where he wants them, if you will, where they're not economically strong, they need help, they could use the U.S. support. Does he use that to craft some type of deal? And if that happens, my gosh, I mean, you're talking about probably the Chinese market being up 10-15% on a blink of an eye. But I think that's the kind of stuff that he's very good at, which is people are just absolutely adamant and assured that the trajectory has to stay the same. And, he's smart enough to kind of understand where people's pain points are from a negotiating standpoint. And maybe he tries to craft some deal that makes us a kinder, gentler type of administration with the Chinese going forward. Maybe not, but I think that's certainly a risk to the bears that has not been properly vetted. There are really four themes. When I was on the road this week talking to people, it's great to see people in Chicago. Shout out to my friends and new faces in Chicago and Kansas City. Always great to travel the Midwest, particularly this time of year. It's got that nice bite in the air and back to my roots. But four real themes that we're talking about here. First is seasonality. The seasonality for the market for the next 3 months is actually the strongest right in this zone. In fact, officially it's the 23rd of October. So that'd be next week, Wednesday, I believe it is. The second is our market cycle clock continues to be in this bullish zone. Low growth, low inflation tends to be more supportive for the Fed, tends to really be supportive for cyclicality. We're also seeing this spread or this differential between credit, which is very aggressively bid. In other words, credit spreads are low. There's not a lot of concern in the credit markets, but at the same time, there's this elevated risk in equities with volatility or the VIX. Historically, And I'm sure it's around the election. I'm sure it's a little bit around the Middle East. But historically, those spreads contract. In other words, equity market risk tends to decline and meets credit markets versus credit markets start to expand those spreads. In other words, good news for the equity markets, I should say, in short. And then finally, kind of burning off this overbought condition in yields. Yields are still in a downtrend, and we continue to believe that they will work lower technically as we've seen the sequence of lower lows, lower highs. We start punching through 425. That's going to be a harder position to maintain. But right here, it certainly still seems to indicate that we're going to see that contraction. And with that, if we look at that kind of combination of things, seasonality, overbought condition, the short-term tactical sentiment, market cycle clock, etc., that tends to skew us more towards cyclicality. So, our big calls here are really pushing towards cyclicality, and then China. We think the turn in China is real, legit, and probably has some duration to it that is underappreciated in the broader marketplace. Neil, what's happening next week in terms of data?
So I'm going to actually be paying attention to the Beige Book, which is released ahead of the November FOMC meeting. Obviously, we had a really strong employment report.
Did they call it the Beige Book because it's actually beige? Was it like a book that was dropped on the desk?
Yeah, there's a Beige Book, there's a Teal Book, I think there's a Green Book. I don't even know.
Oh, all right.
But at any rate, I'm gonna keep an eye on that because there hasn't really been any evidence in the anecdotal side of like this re-acceleration in employment, which the market seemed to be hopped up on. So I do think that'll be interesting to keep an eye on. And we also get the sort of preliminary reads on manufacturing and services PMIs from S&P Global. And then on the Fed front, it's pretty busy as well. I mean, there's been a lot of Fed speak lately. I don't know how much of it really matters anymore because I think Powell's basically doing what he wants, but we'll have a bunch of Fed speakers next week as well.
Steve, how about you? What's happening in the DC canyons?
So 2 weeks from Tuesday is the election, and still running out of time for this late October surprise, if one's really going to materialize to shape the race. Maybe looking abroad in terms of what's going on in the Middle East. Obviously, Hamas leader Sinwar was killed. I think you have the Biden administration trying to push for a ceasefire. That'd be good, I guess, for just stability in the region. But I don't know that that's going to necessarily move the needle that much for voters at home. But it could impact, oil prices and some of the, again, stability concerns over there. So it's sort of what I'm keeping an eye on.
Well, certainly we'll keep an eye on key levels. The S&P next support level is 5675. That represents the breakout that we had back in mid-September. So good markets tend to hold those previous resistance levels as support. So that'll be important. And again, on the 10-year, going to be watching that 425 level. Really, it's about 416, but we always give it a little bit of wiggle room for stops to be triggered, etc. And then I would say that encouragingly, Bitcoin has been doing well and breaking out, at least breaking out on a tactical basis. Got through 65,000, where we see the sights now set at about 72,000 for the next level, but a breakout there would be good news. Obviously, that also seems to be influenced a bit by Trump's lead in the polls. So all of that we will watch. Well, join us again next week. We'll be 1 week older, 1 week wiser. And don't forget to follow us on Twitter and watch this on YouTube, where you can see my terrible bad hair day. I just don't get it. And we'll be back with you next week. Until then, I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pallett.
We'll see you.